Hey everybody, welcome to the channel. Soil here, and today I want to explain the differences between margin trading and futures trading. We're going to compare the two platforms on Binance to see how they differ from each other so that you can decide which one is better for you. Without wasting any more time, let's get started. Let's go to margin trading from here and futures market here in derivatives. Let's go to USD margin futures. In this video, I don't intend to explain margin trading or futures trading because I've already published videos about them and I completely explained every detail about Binance margin trading and trading on Binance futures market. So if you're not familiar with them and you're interested to learn margin trading and futures trading, you can check those videos later. I also put the links in the description of this video so you can easily go to the videos that you want. The focus of this video is discussing the general difference between margin trading and futures trading on Binance and what important points you must consider when it comes to choosing them for your trading purposes. Alright, the first and the most important difference is that these are different markets and the assets that you trade on these platforms are totally different. Futures market is actually a derivative market and the assets that you trade are contracts that their value are derived from an underlying coin. Here you don't buy or sell the coin itself and you buy or sell a contract. For example, for this BTC USDT perpetual contract, when you go long or buy it, you don't buy the Bitcoin itself and you just buy a contract and you will have a possession of the contract. You'll have an open position, which is a long position for our example, and then you can close this position in higher prices and make profits. But in margin trading, when you place an order, your order is actually placed on spot market. Margin orders are in fact spot orders, which means you buy or sell the coin itself, not a contract. So for example, if you go long or buy this pair BTC USDT, you actually buy the Bitcoin and you will have the Bitcoin in your wallet. And then in higher prices, you sell your Bitcoin and make profit. I guess you got the point now how they differ in terms of the assets you trade on them. So margin trading and futures trading are two different markets with different kinds of assets. Another difference between margin trading and futures trading is the amount of leverage and the way that is used for trading. In margin trading, we have smaller amount of leverage in compared to futures trading. For now that I'm making this video, we don't have leverage of greater than 10 in margin trading, and also the amount is different based on what margin mode you select. For example, for BTC USDT, you can have leverage of up to 3 for cross margin and leverage of up to 10 for isolated margin. But on Binance futures trading platform, you can have leverage of up to 125, as you can see, for both of cross margin and isolated margin. Also, the way that leverage is used for futures trading is different with the way that is used for margin trading. On margin trading platform, for a cross 3x, for example, you can borrow coins up to 3 times of your initial fund, which means you can actually have your capital tripled for trading. For example, if you have 1000 USDT, you can borrow 2000 USDT and you will have 3000 USDT available for trading. You trade and then when you're done, you must repay your debt, the 2000 USDT plus interest. But for futures trading, you don't borrow funds, and based on the leverage that you select, you can open a trade with smaller amount of money. For example, with leverage of 10, buying 1 Bitcoin costs 1/10 of the current price of the market, something like 3,500 USDT. So the amount of leverage is different on the two platforms, and also the way that leverage is used in futures trading is different with the way that is used in margin trading. The other difference between margin trading and futures trading is trading fees that you pay after each trade. In margin trading, as I just explained, for leverage you borrow funds, and by the help type of borrowed money you buy or sell coins. In other words, you trade. Besides paying trading fee after each trade, which is exactly spot fees, for example, for VIP 0 level, it's 0.1% for makers and takers. Besides this fee, you must repay your debt, and also you must pay interest for the money that you borrowed, which is calculated every hour on Binance. For example, if you borrow BTC for VIP 0 level, the borrowed daily interest rate is 0.05%. But in futures trading, you don't borrow funds, so you don't have to repay anything. After each trade, you must pay trading fee, which for USD margin futures for VIP 0 level, it's 0.02% for makers and 0.04% for takers. And besides this trading fee, if you trade perpetual contracts, you may also pay funding rate. Funding rate is used to make sure there is a convergence of prices between perpetual futures markets and the actual underlying asset. The funding rate is not a fixed amount and it changes. It's calculated based on Binance interest rate and some average of last price and mark price. And based on this funding rate, traders pay or receive funding, which is the difference between contract price and index price multiplied by this funding rate. When the market is bullish, the funding rate is positive and long traders pay short traders. And when the market is bearish, the funding rate is negative and short traders pay long traders. On Binance, this happens every 8 hours, and this is the countdown you see here. So in futures trading, besides the trading fee, you may also need to pay a funding rate if the market is moving in your favor. I explained general differences between margin trading and futures trading in this video, and for more details and explanations of Binance margin trading and Binance futures trading, I recommend you to watch my comprehensive tutorials on these subjects so that you better understand the process of trading on each platform. Alright, that's it. Thank you for watching this video. If you have any question, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it, please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. See you guys in next episode, and good luck with your trading.